Good evening, everyone. This is Henry Gambell with simplertrading.com, and in tonight's free video, I wanted to cover a couple of ideas that I had been sharing in some of these previous free videos and the way that I've put those ideas into action. The ideas for Goldman Sachs and CSX are still basically intact. They haven't really been doing a whole lot as of late. I think the ideas still look good, but one of the places I wanted to share a strategy with you was here in Alibaba. So the reason why I'm looking at this is because you have a daily squeeze that has fired short. This is one of the primary signals that I use day in, day out, and I enjoy it quite a lot. You can also see that we are right in the midst of trying to have an 8 and 21 EMA cross, which is one of the things that I like to see for, in this case, a bearish trigger. And then also for today's candlestick, a little bit of buying, but ultimately settles near the lows below those moving averages, and I feel like the bearish idea is still coming through fairly well. One way that I will get ideas started, if I would like to be bearish, but I don't necessarily want to come in and just start piling in yet, is to come in and reference an unbalanced butterfly. And there's several different ways of working with butterflies, but I like these so much because if you end up being in a choppy situation and Alibaba just hovers around 180, that's actually where this strategy will yield the most profit and can do great if you're looking for some short-term opportunities, really trying to get some quick decay out of a position. Initializing these in the shorter dated expiration can be a great way of going about it, and by unbalancing them, I have no risk to the downside if the underlying decides that it would like to completely roll over. So for this way of thinking, that strategy is looking great, and as I get into tomorrow thinking, alright, this has started to roll over a little bit, it's doing as I think it would like to do, well then I can come in and look at a standard butterfly out into next week's expiration. So something around 170, 172 half to initialize the body there, I think is a great way to continue for the downside pressure. But if you wanted to take another trade and say, all right, that's how Alibaba has played out, let's look at another example. Another place that I've done this is SPX. So in SPX, we can pull up the chart here. Closed today at 28.05. This one isn't quite as much as far as the moving average or the squeeze trigger as I like to cover, but if you're following the idea that the end of March could be seasonally a little bit soft, or same thing, where you'd like to see it move lower, but you'd like to be able to make money if it trades sideways also, this is where this strategy really does the best. You can see that I'm long 1 of the 28.20 calls, short 3 of the 28.30s, and then long 2 of the 28.40s to help balance out that risk and make sure that I don't have undefined risk should this have some type of a radical gap higher. When you look at this in the risk profile, it creates a very similar graph because we're just using the exact same strategy. So this will do the very best up into 28.30. That's where technically it would pin, though I'm not trying for a pin at these strikes. If it just completely rolls over, you take in the credit received, which in this case is a little bit more meaningful, and I think that this is a great strategy to deploy in the current market where we could sit sideways and chop, but we could also roll over, and this is a good way to ratio out those flies to try to give yourself a chance to make money regardless of what it does. So I hope that's helpful, and I'll continue to keep these ideas updated as we get into the end of the week.